Hello guys, welcome back to the channel Head Pro Traders, and this channel is a channel for traders that are struggling primarily with determining the market bias for the forthcoming trading week. So if you are that trader, you're struggling with bias and you accidentally find this our channel, your struggle has ended, so stick with us. So going into this week, before we start our weekly prediction, we are looking at the economic calendar, which is our roadmap for the forthcoming trading week. And what we have right before us on Monday, we do not have any red folder news. Same for Tuesday, apart from this medium impact news on the card. But for Wednesday, we have news from New Zealand, and it will impact this New Zealand dollar pair. Same thing for Japan, the JPY pair, then 7 p.m. the USD pair. All time that I'm talking about, they are Nigerian time. 7 p.m. Nigerian time, we have the FOMC meeting minutes. But on Thursday, we have red folder news for the AUD pair, the USD. Thursday is CPI, very volatile news, so be careful while trading it. Then on Friday, we have red folder news on the GBP pair as well as the USD pair. Then that is that. Let's go to the charts. Let's start with the dollar index. Let's go to the monthly charts. So this is the monthly chart on the dollar index, and if you look at the chart thoroughly, last week we said that we could see price trading into this zone, and price did trade into this zone. So our bias for this pair last week was that it was going to be bearish. Let's look at the weekly charts, and this was the zone I showed to you on the weekly charts, and the reason was that I showed you this fair value gap, and I showed you how the market closed below it previous week, and I told you that going into this week that just ended, if this bearish move is sustained, then this is our target for the week. Then ultimately we could be looking at the zone. Now that price has indeed traded into our target, what should we be looking out for in price? So on this daily charts, you see this zone here that I brought out before. You don't know what it is, but the market gapped on Wednesday. Then Thursday, the market opened with this gap. This was as a result of the market reacting to uncertainty as a result of President Trump's announcement on tariff. So we saw that reaction on the market and we saw this gap, but eventually the market traded right into our zone on Thursday and rejected from it, right? You can see the body of this candle closing below the midpoint of this zone. So it's a sign of rejection. Then Friday during NFP, we saw how price also dipped into the midpoint of this zone but closed above it. So to me, this is a sign that the market will want to be bullish for a while. Like this week, you could see the market trading to close this gap here that was created on Thursday when the market opened. Then ultimately you could see price take liquidity here, then trade right back down into this zone, right? That is to say, if price will trade right into this weekly fair value gap and disrespect it, then this zone, you should be looking at it. Let's look at EURUSD. So this is EURUSD. Let's look at the weekly charts. Last week I drew your attention into this zone and this zone, right? Told you that there's a possibility you could see price trade into it. They ultimately take out liquidity here on this weekly chart, right? But we saw how price traded right into this zone, and eventually the week closed, and you see that this zone still, that price is acting as resistance for price. Look at this zone here. That is a breaker block on this daily time frame, right? This candle here is a breaker block. So you've seen how on Friday's trading traded right into this breaker block and is respecting it. You can see the body of the candle closing above it, so that could be an indication that you could just see bullish move on this Euro USD pair. You could just see price moving from this zone right back into this ultimate zone to take liquidity there, assuming if you see price trading bullishly and disrespecting this zone. Like if this zone will not act as resistance to push price down, so that's something you should be looking out for. But on the ground that price disrespect this zone, this is an order block that you should be looking out for, that price could just trade into, then continue its bullish move upwards. But if you see price taking out this low and you get a full body candle close beyond this point, so that could indicate a market structure shift, right? That could indicate a market structure shift, assuming you see price doing this. Break the zone, that with a full body candle close, that could be a market structure shift. Then you see a retracement back into maybe a fair value gap. Then you observe to see if that fair value gap could further push price downwards into any of these zones, right? There's a gap here that has not been totally mitigated. Go and look at it on your chart. There's also a gap here, then a gap here, as well as liquidity resting downwards. So those are some of the things you should be looking out for on the Euro USD pair. All of that will be possible if these two zones don't hold price, right? So let's look at GBP. So this is GBPUSD, and last week, this is the daily chart. Last week I was expecting price to take liquidity from this consolidation before giving us this bullish move into this zone, but price did not do that. On Wednesday, when the tariff was announced by President Trump, we just saw price being bullish. Price just shot up, traded into this weekly fair value gap. This is a fair value gap on the weekly time frame, then rejected from it. Then Friday's trading saw price traded downwards, took liquidity here, and is at the top of this weekly fair value gap. Let me show you. So price tapped into this weekly fair value gap and it's just there. So what this might imply for us for this pair is that we might just continue to see that consolidation, right? But if price still continue its bearish move on this pair, you can just see a price trading right into the midpoint of it. Then from the midpoint of it, you could just see that bullish move right back to tap liquidity here, assuming if this weekly fair value gap will act as support for price. But on the ground that you see price trading off it, then you just have to be bearish on this pair. But let's see what next week will show us in price action. Then we'll be able to get a pinpoint direction on what this pair will do. Let's look at gold. So this is gold, and last week I told you that we cannot be buying the market at this point here. Gold is bullish, but we cannot buy it here. So I brought out several zones on the weekly charts. Let me go back to the weekly chart. I showed you that price would reverse. If you see a reversal into this zone, right, we can look for buy setup here. Then on the daily chart, say if we see a reversal into this zone, we should look for buy setup. So price has hit the first zone that we talked about last week, which is this daily fair value gap, and has closed below the midpoint of it. So that could be a cue that this market might still be interested in coming down. If you look below here, there's liquidity resting here, and also price might tap into this zone then before giving us that buy setup. But all of these might be invalidated because gold has been bullish for a very long time, and you could just see its price take out the zone. It could just be a market structure shift, and then you could just see gold selling. Ultimately take liquidity here, assuming if it does that and this weekly fair value gap does not act as support to push price further up, then you have to be bearish on this pair. But if you can get a bullish setup from here, assuming this daily fair value gap will give us what we want next week, then if you get a bullish setup, don't be afraid to take your buy. But if price trade into this zone, also look for that bullish setup, but respect your risk management. I'll say it again. It will be very key for you at these zones where price might just do a reversal. So let's go to EURCAD. So just a quick one on this. I told you last week that this fair value gap on the weekly time frame could act as support to push price further up, because last week we saw price rejecting from it. Price didn't even trade to the midpoint of it, just rejected, and this week we saw this bullish move. But last week I told you something, that this order block here could act as resistance to push price down, and we've seen how price tapped into it on Tuesday, came down, Wednesday came down, Thursday see how price traded over it, but the body of the candle closed below it. Then Friday again, you can still see how price is still respecting this daily order block, right? So that would be an indication that this market might still want to sell. So for me, if you see a break of structure, probably on these 2-hour charts, right, see price rejecting this zone or any of this zone, that could be an indication for you to sell the market. If you see price taking out this zone or this zone, right, it could be an indication for you. Let me show you. You see price do this, trade right back, maybe into a fair value gap on other block, you still look for sell setup on this pair. So these are my buyers going into this forthcoming trading week. I'm not expecting much from the market. CPI is on Thursday. If you find value in my content, subscribe to this channel, put your notifications on, like our videos, and do share it. So I hope you staying with us, you learn more about trading buyers, and you find profitability in the market. God bless you.